Are you a small business owner looking for effective tax-saving strategies? If so, you're in the right place. Today, we're diving into the world of taxes, a topic that might seem daunting, but is crucial for the success of your small business. Why is that, you ask? Well, understanding and planning around tax laws can significantly reduce your taxable income, leaving more money in your pocket at the end of the day. However, navigating these laws can be complex. That's where we come in. Our aim is to simplify this process and provide you with easy-to-understand, effective strategies to save on taxes. Whether you're a seasoned business owner or just starting out, these strategies are designed with the goal of making your tax planning less stressful and more beneficial. So buckle up and get ready to dive into the world of tax-saving strategies. Stay tuned to discover the top tax-saving strategies that can benefit your small business. Before we dive into the strategies, let's get a clear understanding of the basics of taxes. You can't discuss tax-saving strategies without knowing what taxes you're up against. For small businesses, there are three primary types of taxes you need to be aware of: income tax, sales tax, and payroll tax. Firstly, income tax. This is the tax you pay on the income your business generates. It's important to note that this isn't just the profit you make, but your total income. However, you can reduce your income tax by deducting legitimate business expenses, but more on that later. Next, we have sales tax. This is the tax that you collect from customers when they purchase your products or services. Now, you're essentially acting as a tax collector here. You're responsible for collecting the right amount of tax and sending it to your state's Department of Revenue. Lastly, payroll tax. If you have employees, you're responsible for withholding a portion of their wages for income tax and Social Security. You also have to pay a matching amount of Social Security tax. It's a bit like a dance, with you and your employees paying equal parts. Understanding these taxes is key to managing your business's bottom line effectively. While taxes can seem like a burden, they're a crucial part of running a business. They fund essential public services and infrastructure that your business relies on every day, but they can also take a significant chunk out of your profits if not managed properly. The impact of taxes on your business can be substantial. It's not just about the money you pay, it's also about the time and resources you spend on tax compliance. This includes keeping accurate records, filing tax returns, and staying up to date with tax laws. And that's where tax-saving strategies come in. They can help you minimize your tax liability and free up resources so you can focus on growing your business. Now that we have a solid foundation, let's move on to the tax-saving strategies. Our first strategy revolves around deductible business expenses. Now let's unravel this concept. Deductible business expenses are those costs that you can subtract from your income before calculating your tax due. They are like the superheroes of your business world, swooping in to combat the villainous tax bill. Let's look at some examples of common deductible expenses. Picture a world where every pen, paperclip, or post-it note you buy for your office can be a tax deduction. That's right. Office supplies, a seemingly mundane expense, can be your secret weapon in reducing your taxable income. Now, imagine you need to attend a business conference across the country. The good news? Your travel expenses, including airfare, meals, and lodging, can also be deducted. That's another superhero in your tax-saving team. What about that shiny new laptop or that high-speed printer you just bought for your business? Yes, you guessed it. Equipment purchases are yet another type of deductible business expense. So, you see, deductible business expenses are not just about big-ticket items. They encompass everything from the staples in your office to the plane tickets for your business trips. The key here is to keep meticulous records of all these expenses. Whether it's a receipt for a box of paper clips or an invoice for a new office chair, every bit counts. Remember, keep track of all your business expenses. They could help you save a substantial amount on your taxes. The second strategy we'll discuss today is home office deductions. Now, this is a strategy that's become particularly relevant in recent years, with more and more people shifting to remote work. But bear in mind, not every home office qualifies for a deduction. The IRS has specific criteria for this. The space must be used regularly and exclusively for business. That means your kitchen table doesn't count if it's also where you eat dinner. So, how do you calculate this deduction? Well, there are two methods. The simplified method allows you to deduct $5 per square foot of your home used for business, up to a maximum of 300 square feet. The regular method, on the other hand, requires more detailed record keeping. It involves calculating the percentage of your home used for business and applying that percentage to certain home expenses. And what impact can this have on your tax liabilities? quite a significant one actually. By reducing your taxable income, the home office deduction can lower your tax bill and possibly even drop you into a lower tax bracket. But remember, it's crucial to keep detailed records and receipts. If the IRS decides to take a closer look, you'll want to have all your ducks in a row. If you're working from home, don't overlook this valuable deduction. It's a strategy that can potentially save you a considerable amount of money come tax time. The third strategy focuses on self-employment tax deductions. Self-employment taxes, they're a bit like that uninvited guest who always shows up at the party. They're essentially the Social Security and Medicare taxes that you, as a self-employed individual, are solely responsible for. After all, there's no employer to share that burden. But don't fret. There are ways to reduce these taxes through deductions. First up, we have health insurance premiums. If you're self-employed and paying for your own health insurance, you can deduct the cost of your premiums. This not only includes your own coverage, but also premiums paid for your spouse, dependents, and children under 27, even if they aren't dependents. Next, we have retirement contributions. If you're stashing away money for your golden years through a simplified employee pension, or SEP plan, or a solo 401k, those contributions are deductible. Essentially, you're being rewarded for preparing for your future. But remember, not all expenses can be deducted. Personal expenses, for example, are not deductible. So that new gaming console you bought to unwind after a long day? Unfortunately, you can't deduct that. To navigate these waters, it's always a good idea to consult with a tax professional. They can guide you on what expenses are deductible and help you avoid any potential audit triggers. Being self-employed comes with its own set of tax challenges, but knowing these deductions can help lighten the burden. We've covered a lot of ground today, so let's recap what we've learned. Firstly, we dove into the importance of understanding the basics of taxes. Taxes are not just a yearly burden, but an integral part of your business planning. By having a clear understanding of how taxes work, you're able to better manage your finances and identify areas where you can potentially save money. Next, we explored the strategy of deductible business expenses. Remember, these are costs directly associated with running your business. They can range from the obvious, like your rent or utilities, to the less evident, such as business-related travel or professional development courses. The key here is to keep meticulous records and receipts of these expenses. Then, we moved on to the home office deductions. If you're running your business from home, you can deduct a portion of your home expenses. This includes a portion of your rent or mortgage, utilities, property taxes, and even repairs. The catch is that the space must be used exclusively and regularly for your business. Our third strategy was self-employment tax deductions. As a small business owner, you're responsible for both the employer and employee portions of Social Security and Medicare taxes. However, you can deduct the employer equivalent portion of these taxes. This strategy is a significant way to lower your tax bill. The overarching theme here is planning and understanding. By being proactive and organized with your taxes, you can save a significant amount of money. It's about knowing what deductions are available to you and how to correctly claim them. However, taxes can be complex, and it's easy to miss potential savings or make mistakes that could lead to penalties. If you're unsure about your tax situation, it's always a smart move to seek professional advice. A tax professional can provide guidance tailored to your unique situation and ensure you're not leaving any money on the table. In conclusion, the strategies we've discussed today are just a few of the many ways small business owners can save on taxes. The key is to stay informed, keep organized records, and be proactive in your tax planning. Remember, the key to saving on taxes is understanding your obligations and taking advantage of the deductions and credits available to you. Thank you for watching, and best of luck with your tax-saving strategies.